Morning, everyone. Welcome to this year's Diamond panel. Always a source of lively discussion and a popular part of the one-to-one calendar. And that's with good reason. Last year, on this very stage, Ian Hairbottle of Gemfields was seen proposing to one of our esteemed guests today. A little bit of a shock that he had his own shotgun wedding later in the year. And more of that later. But no such shocks this year, I'm sure, but first we'll do a quick review of 2017. It was a bit of a curate's egg of a year, that is to say it was good in parts. The year started strongly and tailed off as De Beers and Alrosa moved to a policy of destocking as the year progressed. That said, we seem to have had a solid start in 2018 with volumes holding up in the key US market and India continuing its recovery from its recent demonetisation programme. Anyway, enough from me. I'm joined by the executives of three of the industry's leading diamond producers to discuss these trends and the outlook for 2018. But first, some introductions. I'm Christopher Raggett. You can see the photo up there. That's before I lost a bet and had to grow a beard. I'm a former lawyer, so I like to talk, but I promise I will stop very soon. I represent FinCap. We are one of the foremost advisors on the London Stock Exchange and a preeminent champion of growing and ambitious companies, particularly in the mining sector. To my left is William Lamb. He's CEO of Lucara Diamonds. He has over 24 years' experience in mining and operations. 13 of those were with De Beers, and William's been instrumental in the development of Lucara's Karowe mine located in Botswana, which is one of the world's most significant producers of large, high-quality stones. Next to him is Johan Dippenaar, CEO of Petra Diamonds. He's another industry grandee with over 27 years of experience, previously with Crown Diamonds, which was acquired by Petra in 2005. Since then, Johan has established Petra as a leading independent diamond producer with operations in South Africa. Gem Diamonds, a mining engineer who's held senior positions at AngloGold, De Beers and BHP Billiton. He runs Gem's operations at Letseng mine in Lesotho, which, as you all know, he just can't seem to stop finding newsworthy stones. So, with such a wealth of experience sat next to me, I'm going to stop talking, and I'm going to hand over to William and ask him, with the markets down 6% in the Far East overnight, and with increasing competition for capital across stock exchanges, why in 2018 would an investor put their capital behind a diamond producer?
Thanks, Chris. It's an interesting question because when you look at the sale of jewelry, it's one of those lagging indicators. It always comes after we've actually sold. And if we look at the back end of 2017, there was sort of a little bit of pressure on the diamond market, but I don't know whether it's systematic to what the Diamond Producers Association is doing, but there's a fairly large amount of liquidity in the middle market. And very often they do behave irrationally. And we can see that by just the demand that they have for goods, and they will pay very high prices. I think anybody who has diamonds now, sell them, because there is money available and they will pay top dollar for it. And it's that which I think will drive good results for diamond producers in the first half of the year, and then it always lags. And I think that the last half of the year is always questionable because there's certain factors which will come in. There's a lot of holiday seasons which will drive variable results. But I think the most important thing for the producers is take advantage of the liquidity while it's there, because it's not going to be there all the time, and that's where drives returns to us.
So taking that theme, stepping back, Johan, talking about seasonality, was the end of 2017 as strong as we expected? De Beers obviously put out their announcement earlier last month. Did that have the results we anticipated?
Yeah, we certainly saw the market strengthening up early part of December. The July to September, October period is normally quite slow because of the northern hemisphere sort of summer holidays, and always see the market towards the end of December and then January to June being at its strongest as people are stocking up for the December period, which normally is the strongest sales month, and all the indicators are it was a fairly decent Christmas sales in the US and so forth, which is a large liquidity event for the industry. So, as William has pointed out, people have liquidity and they're stocking up again for the next cycle.
Yeah. And Johnny, just the other main theme from 2017 was the Indian demonetisation programme. Alongside the US demand over Christmas, has that now fed through? Are the effects of that finally washed into the market, or can we expect more volatility?
that's an interesting question, Chris, because we were certainly victims of that through the first half of last year, and was one of the catalysts for us closing Gagu, because we really did see the market for those goods take a knock of about 30% towards the back end of 16, early part of 17, and that was the driver for that decision. It certainly looks like that's washed through the market already, and that's been factored in, and it seems to have come to an end. Is our take on it.
Okay. So looking forward, do you think, you're obviously adjacent to some of the mines that will be coming online in 2018, Lucapa's mine, it will be hopefully coming online this year. Is there sufficient demand now to justify those new mines opening?
Yeah, I don't have the guts to do that. I think new mines coming on stream right now are going to battle, and probably battle for the next 2 to 3 years. But Chris, you've got to have a look at where those mines are going to play in the market. And if you have a look at Dikobong at Firestone, they're playing in the finer diamonds with the average dollar per carat. At feasibility being at the $130, $140 a carat, but realized prices of around $70 to $80, and I think that's a sign of the times, and potentially an oversupply on those finer goods. Mutai is slightly different, with us seeing better quality diamonds and certainly larger stones is the forecast that they are looking at. So I think that they're going to have an easier run than the other guys, but it's a tough time to bring a diamond mine to market at the moment. And what we've also seen with mines that have just come in is that the guys are not getting paid full value early on, because the market wants to see what those goods and how those goods perform and how they turn into polished goods, and you don't get full price straight up.
I suppose the other great factor that plays into opening a mine or operating a mine is obviously jurisdictional risk and legislative changes. Johan, you've obviously got core operations in South Africa. How do you see the proposed mining charter affecting those operations and indeed those of others?
Yeah, obviously we're part of the chamber in South Africa, and you've seen the chamber, sort of put its foot down in terms of the unscheduled issuing of the mining charter in it, sort of like the form under Minister Zwane. So, we sort of like compliant with the old charter, and we think something around the old charter would be a good place for the industry to be, and I think through negotiations that can be achieved when we see the positive changes now in South Africa around the politics. So we certainly hope that sense will prevail, and that we'll have a proper negotiated solution, and not just an imposed unrealistic charter like was issued some time ago.
William, you spoke earlier about sort of the demand side, and I suppose one of the themes I took from that was that the super rich remain super rich, I suppose. So at the high end of the market, how do you keep marketing? How do you keep the consumer demand there?
So I think the demand will always be there. If we look at our sales, and when we talk about stones larger than 10.8, if I go back 3 years, we would have had maybe 10 or 15 bids per stone, maybe sometimes up to 20. But as the margins have been squeezed in the smaller size fractions, we actually now get plus 40 bids per stone. So the people are now chasing the higher margin which they get from the larger stones. And the amount of money which is available for those stones is definitely increasing. So for the mines that actually have a very coarse production where they can leverage a lot of the margins from the larger stones, the demand is actually growing for those ones.
But do you think you still have to be innovative in your marketing techniques, or can you rely on status quo? Because obviously you've done some innovative marketing yourself. Is that something you want to continue? Or?
At the end of the day, a lot of the marketing comes down to the relationships which you develop. It's also understanding what the final quality is that the guys actually get out of the stones when they polish it. It's pointless just going out and selling stones but not understanding what the quality is that they get. It's only through doing that you can actually then sort of almost cherry pick who to market to. And we'll set up odd parcels, sort of Indian PK longs and weird names, but it's targeted specifically because we know there's a niche. And there's 1 or 2 clients who only want those goods, and if we can provide it specifically to them and they don't have the extra things that they have to sell or hold on to as inventory, we get far better pricing for it.
So I suppose running that theme about quality and provenance, Johan, how do you see, we discussed this last year, but have your views changed at all on lab-created diamonds, whether they're going to have any impact on the future?
We believe that, there'll be consumers who decide that it's not important to own a natural diamond. So those, would they then want to pay just a small discount or a big discount to a natural diamond? The market will still sort itself out there. I think the work that DPA is doing is great work, and we're getting a lot of traction. We believe at the end of the day, the same way as you can see the time all the time on your cell phone without owning a watch, you still have people wanting to own a fine timepiece, and so you will have this a lot of, some of the changes, like women are more likely nowadays to buy themselves, a diamond than years ago.
I hope that's not true. I left my wallet at home.
Yeah, but normally the unmarried. So if you're married, you still have to
have pony up.
Buy the diamond. And then as well as, the acceptance of same-sex couples, and really, the whole market is just sort of like expanding into many other areas than just the old traditional.
And how about gemstones? How do gemstones fit into all that? Because again, last year, Ian Hairbottle was here championing Gemfields, which with their Fabergé marketing strategy has been really trying to push through. I think he always used to say diamonds are a gemstone and white is a colour. How's that playing into the sort of more budgetary constrained end of the market? Do you see that as a risk to the industry?
Again, obviously, we're dealing mostly with the intermediary market and not really there in the last sort of dollar in the shop front. So I don't think I'm really qualified to really talk about those fashions and so forth. But and the DPA's work is just to sort of like put diamonds out there as a value proposition to consumers, and then of course you still have this last sort of like mile, or the last sort of like part of the chain fulfilled by the brands, big brands and smaller brands and so forth. And we always said to Ian, those colored gemstones always looks better set with diamonds. So, and they complement each other. So I think more or less goes hand in hand.
So, Johnny, do you think, in terms of provenance, do you think millennials in particular have any heed to that, or do they want to know what mine a diamond came from? Do they care if it's lab created or not? What are your views?
Yeah, I think when I chat to my children and I chat to some of the younger people that work with us, they certainly are a hell of a lot more conscious than we were at that age about the social responsibility that comes with mining and exploiting natural resources. So the youngsters around me are saying they'd love to know where the diamond comes from and what's it contributed to. And so when I talk to youngsters about the work that we do around Letseng and to a certain extent in Guagu, funds are a bit constrained, as you can appreciate. But as we talk about those, they're very interested in hearing how we're enriching the communities and what work are we doing to enrich the lives of the people around the mines. So
what is that work? What sort of things are you doing particularly at...
Our focus is primarily on education. So we do a lot to make sure that we provide educational facilities. Lesotho's the fifth poorest country in the world with a huge degree of human suffering. So that's one aspect. And then sustainable enterprise. So we've built dairies, helped guys get vegetable projects off the ground and farming and to a certain extent some agribusiness going. So that's our focus. And I find the millennials are interested in that. They want to know that they are not buying a diamond that is coming at the cost of something else. Mm.
And I suppose to that end, William, is the Kimberley process working, and how do technological advances fit into that? Can they sit alongside it?
Can I say something else first?
Absolutely.
Just in terms of what Johnny was saying, and if you're talking to your kids and everything else, that's the first step. But I think what the diamond industry needs to do is that education needs to be a lot broader. When we took the Lesedi around, and you're engaging with people who have literally billions of dollars, and you're trying to sell the stone to them, and you'd speak to them about where stone came from, they are unbelievably ignorant, just in terms of what effort goes into actually the recovery of a diamond, just the rarity of a stone. And most of them either have watched the Blood Diamonds movie, and that's where their perception comes from, or it's Snow White and the Seven Dwarfs. By all means, go and watch it when you get home. And you have a look at when the dwarves in the mine, and the roof and the hanging wall is filled with diamonds. So the rarity is completely lost to them. And of course, they believe they come out fully faceted. And it's the education of where a diamond comes from, the effort that goes into it, and the true rarity that I think we need to educate the broader market on, because that's going to drive a lot of sustainability in our industry.
How do you do that education piece?
Well, we would rely on the DPA to do quite a bit of it, and maybe it's at the forefront of mind. We actually are doing a 30-minute documentary on national TV in the US. Okay. And it's not about marketing Lucara. It's actually about talking about the value that diamonds have made in Botswana. It's how 2.2 million people have been lifted out of poverty, second poorest country in the world, poorest country in Africa in 66. Now you look at it. Average GDP is over $7,500 a person. And it's what diamonds have actually done. So it's really focused on where diamonds have actually added value to people in not just the local community, but in a much broader sense. And we're going to be doing a lot of that, most probably from March onwards.
I think that's true across the mining industry as a whole, not necessarily just diamonds. But as I said before, the Kimberley process is obviously something that's specific to this industry. What are your views on that? Is that...
Like the Kimberley process most probably does need a little bit of work. If we look at the fact that NGOs have actually left the Kimberley process, it means that they are seeing that there are certain flaws in it. But you're never going to find, unless of course you buy from us, a flawless diamond. No laughter. But there will always be cracks that need to be filled, regardless of what the process is. And it's that ongoing vigilance to make sure that you're covering all the bases. And with the changing in whoever the leader is of the Kimberley process on too regular basis, most probably disrupts the overall maintenance of the system itself. So I think that there does need to be a little bit of repair work done. But the Kimberley process still governs the movements of up to 98% of the world's diamonds. And that, compared to where we were in 2003, is already a significant step in the right direction.
I suppose the follow-on from that is we live in a changing world. Everyone talks about blockchain, which I have to confess I don't particularly understand. It's far too technical for someone of my limited intellect. But is that something that you, Johan, are looking into? I know De Beers are spending quite a lot of money looking into blockchain technologies and how that can guarantee provenance.
No, well, we certainly don't have any blockchain. We have chain blocks at the mines, but not... Look, obviously De Beers is driving this. We discussed this at DPA board meeting, and it will probably find its place in there some way, And again, sort of like want to point out, if you look at South Africa, Botswana, Namibia, Canada, Russia, that's 95% of the world's diamonds, or 90 to 95%. So, and even the bigger formal Angolan project is also co-owned by Alrosa and so on. So you add that to it, you already such a high percentage of the world diamonds are properly regulated. You go and look at diamond mines have low impact on the environment. We're normally out in the sticks. The good work we do in terms of, we also have this focus on education and enterprise development. We've enormously successful around our mines with little centers teaching people how to set up and run a small business, micro loans, where we see a high percentage of people repaying those loans. So, the diamond industry has come a long way, and like I say, with this umbrella organization, the DPA now, you'll see you have these 7 or 8 listed companies. It's also transparent, high level of, you look at all our sustainability reporting annually. Our industry probably not doing as good a job to put that out there, but I think now through the DPA it's happening, and people are realizing this blood diamond type movie, it really is not applicable to our industry as a whole.
No, and I suppose you talked about 95% coming from renowned sources. The difficulty being that once the 5% gets into a regulated environment, it's kind of too late. Is that a fair assessment? So once you've got 5% of the world's diamonds not coming from those reputable sources that you talked about, I suppose going back to my question about blockchain technologies, which seem to be quite distant, but even so, whatever process it is you use, by the time that 5% or however much that percentage is gets into the system, it's too late.
Well, like I say, through the Kimberley process, which obviously can do always with reviewing it and so forth, so people are talking about it's definitely less than 2%. And I suppose the limited understanding, however, of blockchain would say it'd probably be easier then for a consumer to say, well, I can be fairly certain I'm not buying one of that 1% because of the way that, let's say, blockchain can't change it, and it will guarantee that from the source to where they buy it. So maybe that's something, a refinement to the Kimberley process. And like I say, you see De Beers are very serious about this. Our Roses say they're very serious about it. And they're between them, that's 70% of the world's diamonds by value. So, well, we'll have to see how that develops.
So let's move on to some technology that perhaps we'll understand. Johnny, you can talk us through recent developments at your mine that have allowed you to uncover the newsworthy stones that we've seen over the last couple of months.
Well, there was nothing different to what Williams did. You know, we just recovered it through an XRT machine. It's fair to say, and it's fact, that the flow sort technology, which operates on a luminescence basis, missed these diamonds, or missed the 900 carat diamond, but it was picked up with an XRT. So it shows you the advances that have been made. You know, the types of diamonds that we produce are susceptible to being missed by the luminescence type machine. So XRT is definitely the best in the market at the moment, no question. What we're trying to do is to have a look at what we can do about seeing the diamonds in a kimberlite. Now, De Beers did a lot of work on this many years ago, and it's just advancing the technology, better processing power, better understanding of radiation technologies and stuff like that. And if we can get there, and we can commercialize it, because we know it works on a lab scale, it will complement what we already know about XRT. So, you know, hopefully there's a middle ground there where we can stop damaging our diamonds.
And William, what happens at your mine? Are you investing in new technologies to aid recovery or even exploration?
So I'm going to carry on from what Johnny said. When people ask us, and the reason why all the chairs are on filled is because the people that are sitting here actually understand a bit about diamonds. And the empty chairs are those that sort of didn't really want to understand it. And it is diamonds, especially when you look at all of our mines have different profiles. We have different things which we're actually sort of marketing to the company, whereas gold is gold, copper is copper. So the way we approach it is we're mining money. And we will implement technology to ensure the maximum recovery of value as early in the process as possible. Every single one of us has had our own experience with diamond breakage. The Lesedi was much larger than 1,000 carats, and we want to make sure we can recover that whole. Don't ask me how we sell it. That's a different story. But when we start to look at the technology, I think what Jamie's doing is very, very innovative. There will definitely be a place for that in the future. We are looking at sort of some new technology over and above the TOMRA XRT, and we are recovering because the mill is not a compressive breakage mechanism. We are finding diamonds still with a lot of kimberlite attached. And we're concerned that those will be missed by the XRT because it is a sort of a single two-dimensional view. So we're now looking at alternatives which will actually look at up to 300 degrees of the particle. And it's just dual detection in different directions to maximize the recovery of those. So we must really look to roll that out sometime during this year as well. In test phase first, lots of lab work, and then looking at a plant scale operation.
Very good. Well, we've got a couple of minutes left, and I've run out of questions, you'll be pleased to hear. So should we open up to the floor and see if anyone else wants to ask a question? I know Kieran, I've rarely managed to shut him up, so I'm sure he's got something to say.
I guess the panel would probably be helpful to educate the room a little bit on their thoughts on supply and demand for the industry over the next 2-3 years, because obviously we've had the crocodile jaws almost into infinity, which hasn't actually proven to be correct. But kind of where you're seeing the changes in supply, be it Argyle eventually coming offline. We've had the depletion at Marange, and where you think the industry could be heading in with the demand changes, i.e. The cannibalisation from synthetic stones, and how that all looks together, and where the industry will be in 5 years' time.
Johan, do you want to take that one?
Yeah, so always in the years gone by, people keep on adding that new mine, but nobody takes away the much lower volumes from Argyle, much lower volumes from Zimbabwe, the short lives ahead on the Canadian deposits, etc., etc. So we believe that supply, everybody said with all these new mines coming on stream this year and last year, so it's over and over been shown that supply is not a real problem in the industry, and the hungry crocodile, less supply, more demand, that graph will never be true with diamonds, because the competition for diamonds is another diamond. So people will say, right, it's a little bit too expensive for me now to buy that color and that purity, so they can just buy one or two colors or purities down. So you never have that straight, like copper or whatever, type supply-demand dynamic. And I think, in a way, that's the protection for our market. So we'll basically, over the years, you've seen diamond prices growing more or less like world growth is taking place, and then obviously the many more places in the world. Not long ago, China was not consuming one diamond. Now they're 15% of the world market. So India will become a more important place. Then places like Korea, Indonesia, Brazil, all large populations. People are more and more middle-class households there. So all these places will still develop for our industry. So I think we sort of like can look forward to a more stable sort of like period going forward.
I guess one more quick one. I guess the large stones are what obviously grabs the headlines, and everyone's looking at that type of thing. But do you think the industry could reach a point of saturation of large stone production for the actual demand that there is actually out there?
Johnny, I think you'd better take that one.
Yeah, he was looking at me when he was asking that. I think there's a real possibility that can happen. As we improve the technologies and the stuff that William was talking about, the stuff that we're talking about, the potential to actually produce more diamonds of large, exceptional quality is definitely there. And there are, at the moment, there are limited people that can afford these enormous diamonds. At the moment, we're not seeing that is impacting our ability to sell them. And certainly the demand that we have had and the interests we've had on the 910 carat would indicate that the heat is still there. But Kieran, it's possible, absolutely, and it's something that does concern us. We do know that there are limited suppliers of large diamonds into the market. We'll just have to see how it pans out over the next 5-10 years.
Okay, I think we've probably got time for one more question if anyone has one.
It's been really interesting hearing you talk a lot about end markets and pricing and supply and demand side. But I guess investors will look at diamond companies in the same way they look at any other company, which is what's the return on capital, what's happening on the cost side of your businesses. And I just wondered, in the last year, what developments there have been on that side for you, and how perhaps you make that strong case to investors that diamonds are a great sector to invest in full stop.
William, you spoke earlier about paying dividends in the future. Do you want to expand on that?
Yeah. Oddly enough, costs are the only thing that we can control. The way the market behaves, we have no control over what people are willing to spend. So it's one of the things that I think all, specifically diamond mines, are very much focused on. But when we look at sort of our cost of capital and where we're actually reinvesting, as long as you're reinvesting in yourself, we're paying a dividend, but I think we've done a lot of work reinvesting in ourselves, again, to maximize value so we can continue to do it. I think that it is an important part of how we actually sort of shop diamonds to investors. But the challenge which we sit with is with the new mines, I think there was a lot of expectation with the 3 new mines that were brought on stream at the back end of 2016 in Stornoway, Mountain Province and Firestone. And sadly for us, they actually haven't achieved the results which they had messaged to the market. And with so few producers, regardless of what anybody else does, the entire sector actually gets pushed down. And I think it's sort of, this is a great opportunity for us to sort of say, hang on, we're still doing the same. We're still making money. We're still paying a dividend. We're still recovering large stones. We've still got sort of the potential of millions of carats in the ground. That hasn't changed. But the grey cloud that is over the sector at the moment, which is sort of persisting because of poor recoveries or poor results from certain of the new producers, they will get their act together. Sometimes it just takes a little bit longer than what we expect. I think you've got to dispel that and look at the individual companies on their own.
Very good. So we're just about out of time. I'd like to thank our three panellists for their insight and for being so candid in their answers. And thank you very much, everyone, for attending.